Hi folks, David Waring here again with InformedTrades.com. Received another question today relating to the currency market, and the question is, am I likely to get the same fill on 1 million as I am on 10 million, specifically if I'm trading around news? And the answer to that question really comes down to three factors. It's not a simple yes or no answer. And basically those three factors are what the currency pair is that you're trading, what the liquidity is in that currency pair, and what type of access the market maker or broker that you're trading with has to that liquidity. So as most of you probably know, and as we're going to learn in some other lessons when I go into some lessons on the Forex market, the liquidity in the different pairs varies widely. So Euro-US dollar is by far the most liquid pair in the foreign exchange market. So if you're trading the euro dollar, you're much more likely to get the same fill on 1 million as you are 10 million, okay? But something like dollar Canada that doesn't have anywhere near the liquidity of euro dollar, you're going to be a lot less likely to get the same fill, specifically around news events, okay? So that, just the liquidity characteristics of the currency pair you're trading are going to affect the type of fill that you're going to get. The second thing, as it results to, or as it relates to liquidity, is going to be how far the news event that you're trading comes off or in line with expectations. Okay. If the news event that you're trading is a big news event like non-farm payrolls is probably the most notorious for moving the markets, and it comes in way off from what economists were expecting the number to be, then there's going to be a lot less liquidity most likely in the market at that time as the interbank market adjusts to where the new price should be based on that new number that just came out. Okay. Conversely, if the number comes in line with expectations and it wasn't that important of a number anyway, you're probably not going to see much movement in the market, and you're probably going to still have a lot of liquidity as a result of that. Okay. And lastly, and this is the first two things are kind of, they apply to any market. This liquidity question is going to apply if you're trading foreign exchange, stocks, or futures. The last question is unique to the foreign exchange market. Because the foreign exchange market is an over-the-counter market, the brokers that offer foreign exchange trading to individual traders have different access to the liquidity of what's known as the interbank market. Okay, and in general, the larger the broker that you're trading with, the better the access that they're going to have to that interbank market liquidity. Okay, and the smaller the broker you're trading with is, the less access they're going to have to that liquidity. Okay, so there may be a total, if you're trading euro dollar around that news event, there may be a total of 100 million in liquidity in the interbank market that these brokers are offsetting in. Available, and a big broker may have access to all 100 million, where a small broker may only have access to a couple of the banks. He may only have access to 10 million. All right, so that's going to be a factor there as well, and that's probably a good reason to trade with one of the bigger foreign exchange brokers out there. All right, if you have any other questions relating to this, please feel free to leave them in the comments section below, and have a great day.